I, we came in from Singapore, and time is actually an hour ahead of Vietnam, so we're getting hungry. So thank you so much. I know we are staying here in between you and lunch, but we hope to make your time more worth it, and hopefully you learn something from this session. Good. So first of all, I like to to set the stage, talk about fintech in general. So the last 2 days, you have heard about fintech and insurtech for quite a few presenters. So I really liked today's session, even though it's called Celebrating Fintech, Fastforward in Vietnam. I would like to consider both fintech and insurtech together. So fintech is currently the hottest trend, right? Hottest trend in the investment world globally. So I'd like to have a poll and ask, which region globally do you think attracted the most number or most amount of investment last year? So pick between Europe, US, and Asia. Let's see by a show of hands how many people think that US is number one in terms of fintech investments last year. One hand? Only? Two? Okay. Europe? How many people think Europe topped the global investments in terms of fintech last year? No? So what about Asia? I assume all of you, wow, okay, this is great, this is great, this is good. So you are right. This slide shows the amount of global investments attracted last year, and you will see in green, those are the areas from Asia, and purple is North America, and then Europe is actually just 2, right? Ranked 24. So it may not be clear to you, but let me just read out very quickly. Number 1 is Lu.com. Number 2 is JD Finance, Jingdong. The fourth is, fourth, fifth, 6th, 7th. The thing they have all in common is that they are in the lending space, peer-to-peer lending space, all right? So these are all the Chinese, so Asia mainly, in China. Next. So I really like to kind of set the stage by explaining what really is fintech all about. And if you look at this map, fintech really is about technology disrupting financial services. And therefore, one needs to find out and learn and know and understand what exactly are the financial services areas. So let's look at this map. In the center, where fintech startups, around the immediate, around this center, let me see, okay, this is not pointed, right? It is a pointer? Ah, sorry. Okay. So immediately you would be able to see that there are a few function areas in financial services. These are the areas that fintech companies or startups are cracking. So I'm not sure if it's big enough for you guys, but basically let me just go around quickly. Lending, treasury functions, payments, wealth management, investment banking, and retail banking. So these are the traditional areas. But let me say, so like I say, I do like to add that this session is about both fintech and insurtech, so there will also be insurance. And finally, about this slide, this shows a US mapping of the fintech companies and startups that are disrupting each of these areas in financial services. And the bubble represents the valuation of this company. And so the biggest bubble is PayPal. Let's go to the next slide. So this is where I'll bring in both our speakers today, our panelists. If you look at this, this is a report from McKinsey, and it is about the 30 areas emerging as new norms in banking. So it's a lot of fine print here, and I will encourage you to download the McKinsey report. But broadly, again, if you look at fintech and insurtech, it is about cracking the financial services in these areas: retail, payments, small and mid-sized enterprises, capital market, investment banking, wealth management, and insurance. And perhaps it will be great today to listen to experts in these areas. And we are glad to have Philip. Philip Christian is actually one of the most prolific writer in insurtech that I know and I have a lot of respect for. So glad to be here today with you. And second, we have Sandip, and Sandip is a veteran banker, and he has moved to actually Vietnam in a year and a half ago, and he's currently heading up retail banking at VP Bank. So, so I'd just like to also add, as a start of this conversation, that according to the 2016 Ernst & Young benchmarking report, the UK was actually ranked number 1 as having the strongest fintech ecosystem, followed by Silicon Valley and New York. So while Chinese has, startups and tech companies, fintech companies have attracted the most amount of investment, it was actually London, followed by Silicon Valley and New York, that were ranked, up there by Ernst & Young. And the whole point is this, right? And I think Philip and I, we just came from Singapore, this FinTech festival, and that was over the whole of last week. And there was a major conference called the FinTech conference that was really excellent, well curated. And the point made there was that Singapore also wants to be one of those FinTech hubs. But perhaps more importantly, FinTech is a journey. It's not about which country having the higher ranking, whatnot. I think the Chief FinTech Officer of Singapore Monetary Authority of Singapore said it beautifully, that FinTech hubs is about collaboration. So collaborating, working with each other across countries, across regimes, across jurisdiction, I think is really in the true spirit of it all. And that's why FinTech is such an important global phenomenon, because that FinTech cuts across the world in terms of experiences for customers. So,
say, well, but we can't do this or we can't do that because of the regulator. It's actually the favorite excuse in every kind of context there. We can't do this because of that. And of course, regulatory action can create more stability. But we're in the business of change, right? So FinTech and InsurTech and even startup side, we're in the business of change. So we actually need to go ahead and define new standards. And regulators are starting to open up a little bit to that, and they're opening their golden petal a little bit to some of us, the kind of little insects to crawl in and say hi. And that's sort of purely. So what it means, okay, anyway, I can shout. What it means basically is that you must see yourself, just like a central bank is the core intermediary, let's say, financial system. The regulator is the core intermediary of innovation. So as a startup, you're generally very well off being friends with these guys. And it can benefit both sides. And that's sort of a learning which you see in FinTech, but you especially see it in InsurTech, because no startup in this world, in InsurTech, yet takes any risk on their balance sheet from an insurance point of view. So the lemonades and the sort of, with the exception of Friendsurance, which is ultimately peer-to-peer, so it's purely on the users. Usually what they do is they provide a fancy customer interface, then they go to a reinsurer who actually takes a lot of risk, they're in the business of risk, and says, hi, can you take the risk for us? And then the reinsurer goes. So that's kind of how it works.
Good. So coming back again to the point on regulatory, right? So regulatory sandboxes. Is there one in Vietnam?
Okay. So I think the pace of change of regulation is an issue, but I think it goes back to just 2 points I want to make quickly. One is, I think there is greater support for FinTech, and that can only get better. But the 2 points are as follows. One is that regulation will always lag, because unless someone invents the business model, the regulation can't understand what business they're regulating, particularly when it's completely new, like the gig economy. And if you look at pretty much everywhere in the world, the regulation is lagging. So what you really need is a supportive environment, and I think that's more an ecosystem discussion rather than a regulatory discussion. When it comes to banking, I think it's important, and often people forget, that the role of the regulator is, one, to protect the customer and the customer's deposits. The second is to make sure that there is stability in the banking system, so that trade happens. Not the kind of stuff that happened in 2008. That's exactly what regulators do. That's their primary job. It's not to support FinTech or to support anything else. It's to make sure that people's money is safe and businesses can run. And then in that context, they've got to open up and support and create the ecosystems that makes fintech successful. Just like Singapore, the regulator works with the banks and the ecosystem and the investors and innovators and creates an environment where fintech will grow. And that's what we need here as well.
The thing about one point here is that regulation for a fintech startup it's fundamentally one of the biggest competitive advantages. If you can nail regulation as a fintech startup, you're way ahead of the rest. And the sandbox is a concept. It means if you haven't figured it out, go in here. But actually, the really smart fintech startups, they go to the regulator, they understand what they need to know, they come knowledgeable, and they basically provide a very clear case of where they should sit. That's the stuff that regulators love. And when that happens, astonishingly, surprise, surprise, regulators can be quite friendly because that happens so little.
Absolutely, thank you. So to the founders out there who are thinking or who are already in a fintech startup or insurtech startup, running a startup in insurtech or in fintech is like racing F1, right? The point is that just like in an F1 race, it is a very highly regulated sport. Sometimes teams like McLaren or Ferrari wouldn't know what the rules are until 3 days before race day on Friday. And that's when they arrive at the pits and then realize that, hey, the F1 sport have just changed the rules on certain things. So regulators are like the F1 sport regulator, right? And to Philip's point and also Sandeep's point, if you as a startup founder, a fintech founder, can work with the regulators, you actually have a competitive advantage because you do know how they think and how to work around the system. So I just tell you one anecdote because I've been living and working in China for the last 7 years, and I've only just recently moved back to Singapore this summer. In China, there is a really big player, a systemically important player called Ant Financial, and Ant Financial is majority invested by Alibaba. So when Ant Financial started this journey with Alipay, 支付宝, at about 10, 12 years ago, the government said, hey, the regulators in government in China said, well, you're too small, right? I don't bother to regulate you, right? And then look what happened 12 years later. They're now too big, and the regulators say, oh, I can't regulate you now because you're too big. So I think this is a room to play for some of the fintech startups and insurtech. So this is I guess a first take-home point that a fintech and insurtech have to work with regulators. Let's move on to a second conversation here about bringing tech to banking. So it seems that technology or fintech companies in the banking sector is all about improving customer experience. It's all about removing friction of these customers. So really, banking has been using tech for a long time, right? Core banking systems and all that. So why is it, that suddenly there's this whole wave of fintech? How is tech really disrupting banking?
I think often when we talk about customer experience and frictionless, I think that's overrated, and I'll tell you why. What the true benefits is access and value. And why do I say that? So if you look at a country like Kenya, and if you look at the M-Pesa model, which I consider as a huge fintech.
M-Pesa in Kenya. Right?
Kenya. So there are more mobile money accounts in Kenya than bank accounts. There's more money that is transferred through the M-Pesa system, mobile payments, than the banking system. So it's significantly bigger than the banking system, and that's probably the one economy where it's bigger in Africa generally. But why can fintech transform? It's not so much the frictionless, but the fact that everyone now has a mobile phone, and in Vietnam, if you look at mobile phone penetration, it's 150%. 23% banking penetration in many emerging markets, including Vietnam, depending on which number you look at, but underbanked, underpenetrated. What mobile does is create access. You can send money if you're working in Saigon, or if you're in Kenya working in Nairobi, back to your family somewhere else in the country. So the biggest thing that the technology enables is access. And that creates the ability for people to have money, store it and send it far safely than they ever did before that. Because before that they had to carry cash, and cash is not safe. So frictionless, yes, but that necessarily assumes a smaller part of the economy today because mobile penetration is still smaller here.
Yeah, there's a quick one. Tech is, I have to disagree slightly. Tech is always about customer experience. So the reason you use your iPhone is because it's so intuitive to use. If somebody puts a very nice technology in front of you, but you find it cumbersome to use, it doesn't get adopted. No innovation gets adopted without the customer experience part. But I agree that in the unbanked or underbanked segment, people care about sending money securely. However, let's look at the emerging affluent segment, which I'm quite passionate about because it's so big. In fact, Asia has the largest population of emerging affluent. And these guys, what they want is have it all in a few clicks, self-serve basically, and get it done with. And existing institutions sort of risk losing their customer base to something like Ant Financial or other, what we would call disruptive propositions that offer 20%, but for the customer it's like 80% of what they want. It's most of the stuff that a bank can offer, but it offers it sort of in a much more simple and fast way. And I just see this as not necessarily a threat that would mean, banks are bad, but it's an opportunity to see how we can simplify our services, and use technology not just to enable access, but to simplify what we offer.
So I'm going to challenge that slightly. I completely agree with the frictionless part and the customer experience part, which without the technology you can't enable. But let me use an example of India, which is where I come from. Paytm is one of the biggest success stories in India, and it's a mobile wallet for those of you who may not be familiar with it. A few months ago, I was talking to a friend of mine who's a very senior guy at HSBC, old world banking, and I said, and he said, you must open a Paytm account. So I said, but you have a bank account, why do you need a mobile wallet? He says, because they give you 25% off on everything. So, a lot of these things, I buy the fact that the customer experience is great, but anyone here trying to create it without a viable customer proposition and a financial model that is attractive to the customer, well, it's not just going to work because of the experience. It's got to be much more than that, and you've got to give the customer a simple reason why they're going to buy it.
Good. So let's move on to the third topic, right, which is on InsurTech. And insurance is really about risk pooling. There's a strong trend towards connected insurance, meaning combining Internet of Things, IoT, devices, to insurance, telematics. So I wonder if Philip, what is your sense on what is truly disruptive about technology, in the field of insurance?
Okay, so a simple example, right? Let's say you're all in this room, you've all met each other, let's just make this assumption, right? Insurance is going back to the future. It started by a pool of people that knew each other, like you, saying we have this shared risk that one of us may die, have medical expenses, or have a loss, and we're all going to chip in a little bit so that when that risk happens, actually it doesn't impact any of us adversely, because we know it could be any one of us. And the assumption here is mutuality, that we're all equal and these things can happen to any of us. That is also, coincidentally, the future of insurance. The difference is now with funky things like blockchain and specifically smart contracts, which are like software contracts, right? So they just execute legal contracts, but on a software layer. It means that you guys can actually be the insurance company again. That's cool, right? Because that means if you pay a premium, you can probably get most of that premium back. That is the social side of insurance. The reason it doesn't work is because maybe you guys haven't met each other. Maybe you guys don't trust each other. When I used to live in a student housing, we had 180 residents. If each of us were to save energy, we would have had a much lower bill at the end of the year. Big rebate. Didn't happen though. Of course it didn't happen. Because cracking the social contract between individuals is so crucial. That's why we have companies like insurance companies who are trusted intermediaries. Much like a bank is a trusted intermediary between depositors and financial markets, or like Airbnb is a trusted intermediary between someone who needs accommodation and somebody who can provide it, or Uber, you name it. The point is, insurance is a core trust intermediary. You're transferring your risk of something to the insurance company, and then the insurance company has to worry about what to do with that. Typical leads in sort of, big balance sheets with lots of liabilities. But the way it works is that everybody benefits traditionally from this. So what insurance technology is enabling is basically for the insurance company to operate that same thing on a much, much, much leaner stack. Meaning that the technology we now can use to simply ensure that the risk is transferred and that we actually understand the risk is much more sophisticated, because nowadays every one of us has location data available. The things we do every day create a rich digital data footprint. We can just use that and say, based on this, we are much better at understanding what used to be uncertain. Because now we know every single individual in the risk pool, or at least we could know every individual in the risk pool. And that's amazing because it means we can move from predicting or like kind of making bets on an uncertain risk towards telling you how can you sort of change your behavior to actually be less risky in the future. Because that's the only risk that remains, is once we know everything about you and sort of use that in a way that benefits you, then all that sort of really matters is the actions you take and the historic risks that are transparently known about you, such as genomes and decisions and predisposition and character. All those things feed into how risk transfers will happen for you in the future. That's insurance 2.0.
Sandeep.
Telematics. I want to talk briefly about my experience with Discovery in South Africa. In 2014, they launched a mobile driving app where you could rate yourself, and if you signed up for telematics and have it installed in your car, you got a break on your pricing. Now that to me is value to the customer, because you have an app that you can download, and that's where the technology comes in. It adds value to me because it tells me how well or badly I drive and how I can improve that, especially with fuel consumption and stuff like that. And then if I'm a good driver, it helps me get a better premium. And as a customer, I'm very happy to do that as long as I see the value.
Great. So because we're in Echelon, Vietnam, I think we should talk about the current state of fintech and insurtech in Vietnam. So statistics shown yesterday was that there were about 1,500-ish startups in Vietnam. How many startups are there in this space, fintech and insurtech?
Look, we've just talked about Timo, right, as a vernacular play. Basically, it changes the customer interface. But what we're seeing from Vietnam now is that, like, my friend who runs a sort of tech startup, he keeps going to Vietnam, and he was like, it's exploding right now because you have great developers, pretty good designers, a lot of the world outsources stuff here, and those same people might as well just be empowered to start their own company and give it some try. You've got the VC landscape that's starting to look at Vietnam, and if I talk to, let's say, Thailand, right, the ecosystem is a bit bigger and it's really emerging as well in fintech. People say, we're already looking at regional investments. So you actually benefit hugely as well from the regional nature of the investors and the startups here that you're looking at. If you're in Vietnam, you're going to be looking at the next emerging markets to tackle. And if you can work out the regulatory part, there's really nothing stopping you there, because there's so little penetration in banking and insurance that it's really up for grabs, and you're not even going to piss off the banks and insurance companies because they're not serving these customers yet. We can all gain by growing the pie. So that's the overview of the fintech landscape here. Sandeep?
I'd agree. I think there's a huge opportunity, and I'd say there are two things in Vietnam that at least I've found from personal experience that are unique and actually really positive factors. One is that I find the customer resistance to change here is much less than the more established markets. I mean, I've lived in Japan for 6 years. To try and change customer behavior there is far, far tougher than it is to get someone to try something new in Vietnam, and that's great. Two, I think it's in its infancy, and you talked about regulation, but to me it's the ecosystem. So if we see the kind of, I guess you guys know better how long it took in Singapore to get to the kind of reaction you've seen to fintech now. Vietnam's just starting off. So hopefully in that much time, if we can see that kind of transformation, albeit a smaller market, but a really fast growing one. So I think there's huge opportunity. We need, too many of the startups today are just in the payments space. I think there's a lot more, yes. I think there's a lot more opportunity if, one, the payment system sort of gets more, again, becomes an ecosystem. If you have the likes of Nets, if you have the likes of Octopus in Hong Kong, that will enable change. We don't have mass transit yet.
So Philip mentioned about Timo. What other payments company are there in Vietnam?
So there's a whole host of them. I mean, we work with two of them that I can name straight away, which is Momo and Mocha, but there's just, there's probably 20, 25 of them. There's cross-border remittance players that are coming up. We're talking to one next week. The banks, and that's probably a really important point, banks like us are very keen to partner. I mean, Timo is a partnership for us. We didn't know how successful it would be. It's a great interface, it's got great functionality, and we're going to re-engineer the bank to look like Timo.
Excellent, thank you. So we have about just under 5 minutes left. I thought it would be good to do a kind of roundup here. So if there's nothing that you remember from that conversation that we just had the last 20 minutes, let me just give you 5 key takeaways, all right? The first point is this, that I think we need to understand our founders or even investors need to understand the fin and the insure behind fintech and insurtech. And today there is a lot of I would say blurring of these two lines. Fintech and insurtech are going to each other. So really, you have to understand the financial services behind fintech and insurtech. So that means, think of it in 5 activities, right? Savings, borrowing, spending, investing, and insurance. I repeat, savings, borrowing, spending, investing, and insurance. So if you understand financial services in these 5 areas, you are well on your way to start cracking and disrupting some parts of the value chain in fintech. So that's point number 1. Point number 2, fintegration. So earlier, you've also heard from Sandeep that banks are very willing to work with fintech companies. And like it or not, fintech companies have a unique offering, but they don't have the customer base. So what banks and fintech companies have to do is to therefore come together and what we call fintegration. It is through integrating both fintech companies, insurtech companies with financial services institutions like banks and insurance companies that you could really bring about change. So fintegration is critical here, and the banks today are really afraid that, or rather put it that way, the banks today are not afraid of fintech companies disrupting them. They really set their sights on companies that can create platform, right? Platform of customer users.
Can I jump in there?
Please do.
And perhaps add to that. I think there's probably 2 or 3 broad categories of banks. I think there's one set of banks, and I would consider VP Bank there simply because I think the board is very supportive, as is our CEO, that are actively looking for partnerships. I think there's another set of banks that don't actually know what's happening with fintech and digital and can be convinced, in my view. It's just explaining and sitting down to them, a bit like the regulators, as to how it can benefit the system. And I think a lot of people would be positively surprised if you can engage with them and actually explain the benefits much better. So I think there's more opportunity than it seems.
Absolutely. Point there. Single point. If we look at legacy, right, as Manulife, we're a tremendously huge company, right, and Loft is the tiny nimble innovation unit globally. We're in a great place because of legacy, and people that we serve, we manage $1 trillion in assets, right? It's huge. They're in a great position because of that. But legacy is not going to get us to the future. And being a nimble sort of organization inside that, with our own version of how the stack of insurance should look like, allows us to create as simple and beautiful and clean a back end to insurance as the front end of, say, a Timor in fintech. So the point is to really match the simplicity and the beauty of the front end with that same thing in the operations so that we can really create better services and new services.
So to the founders out there, fintech and insurtech is actually a more difficult venture than if you were to go and set up an e-commerce company or whatnot, right? But I would say the saving grace here is that if you are able to crack this problem and work with the regulators, right? And regulators in the region are opening up more and more through sandboxes, so we call it regulatory sandboxes. Then the good news is that you have to stand up come up with a good solution. And to the investors out there, I guess the whole point is that there are a lot of investment potential in financial technology and insurance technology, and that for all of us here in Vietnam, there really is a bright future in fintech. So I just wanted to end off with one last advertisement that in case some of you who no clue what financial technology is all about, I'm pleased to inform you that I'm putting together a curriculum in masterclass of financial technologies and innovation at the NUS Entrepreneurship Center after the Chinese New Year in February. So if you would like to learn more, you could come and see me after this. So thank you so much for your attention. Lunch is served, so thank you, and thank you, Philip and Sandeep. Thank you.
Big round of applause to William, Philip, and